The financial reprieve for Australians finding it hard to keep up with a mortgage will soon be over. Data from the Australian Banking Association shows 82,000 Australians are still deferring their home loans. Let's take some advice now with finance expert Michelle Maynard. Good to have you with us, Michelle.
Thanks, Mon.
How many initially took up this mortgage holiday?
At the height of pandemic, there was around 800,000 Australians, or 1 in 10 of us with a mortgage, who took up the offer from the banks not to pay anything on our mortgage. Now, as 2020 went on, this number did decrease quite significantly, and by December it was only 101,000 Australians who weren't paying anything. 3 months later, like you said, it's now down to 82,000 mortgage holders who haven't been paying anything, but in 20 days' time that ends and the banks will be expecting them to pay something towards their mortgage.
Okay, so it ends in 20 days' time. You're one of the 82,000 with a deferral in place. What happens then?
So the banks have increased their hardship provision teams, and they have been reaching out to these customers to talk about what does come next. They've said there isn't going to be a blanket deferral system anymore, so people are going to be expected to pay something. Now, the banks do have options for those that can't go back to the repayments that they were making in February, and that is something like putting them on a fixed interest rate, refinancing over a longer time, or making their mortgage interest only. And the key components of each of these three things is to lower the monthly obligation that these people need to pay. Now, unfortunately, there are going to be people that still can't afford to even meet that. And what happens next is really something that would be keeping them up at night. The Chief Executive Officer, Anna Bligh of the Australian Banking Association, has said, come 1 April, these people aren't going to be having legal action or people knocking on the door to repossess their house. Banks will be working with them, but the key thing here is they need to be in consultation with their bank. They need to be communicating what their financial situation is and what they can afford to do. Working together is definitely going to be the best thing for those that are really experiencing hard times.
A worrying time for them, and a fair bit is changing at the end of March because the initial JobKeeper package also comes to a close, so too the rent moratorium. What are your tips for those who are in a tough spot?
There are a lot of people really worried about what the end of March is going to bring, and their income is going to be going down. They're going to have to re-meet these commitments that have been on hold. There are quite a few things that you should be doing, but the first one is getting a real handle on what your financial situation is. Look at what your money is going to be coming in the door once JobSeeker decreases, once JobKeeper is gone, and look at what your obligations are to meet. Getting consultation with those people, whether that be your landlord or your bank, if you can't afford to make those repayments, and get a plan in place. There are a lot of free and paid services that you can access to get some information, but make a plan, get in contact with those people. But also the key thing here is take care of your mental health. Financial stress is a real cause of people, and they really need to make sure that they're addressing that.
Michelle Maynard, thanks for the insight.
Thanks, Mon.